Now, if you draw more than 2,000 shillings in per diem, the extra amount will be subjected to tax if the draft finance bill is enacted in its current form. National Treasury is proposing an amendment to the Employment Act 2007 to introduce a 35% income tax on all monthly salaries above $500,000 shillings. Wairimu Njenga reports.
If your monthly basic salary is more than 500,000 shillings, your marginal payee rate will be moved from 30% to 35%. This will only be effective if the Finance Bill 2023, that is before the August House, is approved in its current form. The draft bill, which is expected to go through the first reading, is proposing an amendment to the Employment Act of 2007 to provide for 35% income tax on all monthly salaries above 500,000 shillings. Treasury is also seeking to deduct 3% of all employees' basic salaries towards National Housing Development Fund, with the employer matching the deduction by another 3%, capped at 5,000 shillings. Treasury is also proposing to amend the turnover tax from the current 1% to 3% on gross sales of the businesses and band eligible for the tax to be changed from 1 million shillings to 50 million shillings to 500,000 shillings to 15 million shillings. Digital content creators, influencers are now on the taxman's radar, with the proposal to introduce a withholding tax of 15%, while marketing services will be subject to a 5% withholding tax. Imported mobile phones will be subject to 10% excise duty. Cosmetic products such as wigs, human hair, false beards, eyebrows, eyelashes and artificial nails will now be subject to 5% excise duty. Formal sector employees have not been left behind, with a proposal to tax per diem of more than 2,000 shillings. National Treasury is also proposing to exempt LPG and fertilizer inputs from paying VAT, while exported services, which were attracting 16% VAT, will now be exempted, while services related to business outsourcing will be zero rated. Wairimu Njenga for Prime Edition.